Alright guys, so let me try to do this as quickly as possible. I don't know how long I'm gonna be here. Gonna do a pre-recorded video. I'm trying to do this a couple hours ago, but I wasn't able to be successful at it. So let's try it one more time. Sorry, I have a drink here. Okay, so let's look at this as objective as possible. Like I know, I'm trying to do my best here. It's pretty difficult because I bought into the company already. So just be aware, I'm biased in that sense. I'm always gonna try to pick and choose the right one, and perhaps I have a rosy glasses on. So just be prepared for that. Now I know there's a opposition view over here saying that somehow the company is not growing quick enough. Now you could kind of argue about the growth of the company, how fast it should be growing, but you cannot deny that the company has been improving slowly, right? Improving from the quarter from the next, right? From year on year, quarter to quarter. You could see the improvement. I don't need to tell you that there is an improvement there. Now, people would love to tell you about the top line revenue being down and all that stuff. Ryan Cohen is a piece of what, and there you go. But I would like to kind of point out a little bit here because I don't think people realize this whatsoever, right? Because again, they kind of compared from $9 billion to now. But let's take a note. When Ryan Cohen got in, this is the point of Ryan Cohen, right? Getting in. Note this number right here in red circle. What is that? This is the top line revenue, and this is a trailing 12, okay? Every quarter, you see the trailing 12. What does that number say? Okay, nope, I can't. Hold on, let me kind of do this real quick. So just to make sure people could see that. Also, let me bold it so that people could see that as well. Now, do you see that number right there? $5.1 billion. That's his top line revenue when Ryan Cohen got in. How did I know? Again, this is October. So right when he got in, it was 5.09. $5 billion in top line revenue. So if you want to be fair to this particular company, a particular leadership, you better compare it from the right starting point here. Okay, so he started with $5 billion. What is it now? 5.2. So was it really down? Right? But on top of that, and people would love to let you know, how operating expenses is higher than gross profit. Okay, let me address that real quick. This is trailing 12. Once again, it's a difference between the end quarter and ending of the quarter. So this is a trailing 12. Yes, you have a point there. But how much of a loss is it versus this or this? You see this differences? Night and day. 237 right there. And then you have 29. Okay, would you rather losing this much money or this much money, right? And on top of that, okay, let's take a note. Instead of having just $1.9 million into a interest income, right? At least they have something. $1.9 million. What is it now? $50 million. So what is the problem there? You see what I mean? So there's no denying that this company has been doing amazing already. Right now, again, you could argue about how fast they should be growing already. But come on, give the guy a break here. Again, like the evolution of the bear cases has been, this company's going bankrupt. Have they been bankrupt already? It's been 3 years. It hasn't, okay? This company is burning cash like crazy. Okay, you have a point there. Okay, right there. Last year they did like crazy cash burn right there to the tune of $500 million. All right, they burning cash like crazy. Now that they're not burning cash anymore, what is the sentiment now. Oh, they're not growing fast enough. The reason why their net profit, when they were burning cash, when they burned less cash as time goes on, what did they say? Oh, they're never going to post a net positive, right? You could be cash flow positive, but net is not positive. Okay. Now, when they're posting net income positive, oh, that's not good enough because they use a treasury bill to do that. I mean, isn't that exhausting to you, like to hear? But again, this is the point of investor, right? We see the trend to go the other way that is for the company. And Ryan Cohen has been doing amazing already. Again, he's growing from $5.1 billion top line revenue to now 5.2. So if you want to be fair, he's actually increasing in top line revenue when he got in. Okay? And again, people would love to compare it from this point of view, because again, it's so much of a trend the other way that is so massive to these people to develop that negative sentiment about the company. Okay? Now, again, let's bring up the profit margin and all that stuff. This is important because now we're in the positive ground zero type thing. It's going to be fine. Treading water is better than just swimming against the current and not knowing what the direction of whether you are swim towards the coastline or swimming towards the ocean here, right? Because again, we're in the storm right now. To make the analogy, you don't want to exhaust your energy trying to swim against the current. So just go with the flow for now. That's what Ryan Cohen, I assume, and leadership is trying to do, at least to stay afloat to the point where they're not burning cash, making a little bit of money, paying off what they need to pay off in order to stay light on the feet, right? Reserve that energy in order to be able to setting up for decades to come, right? Now, I would like to kind of address one more thing here before I let you go. Is the cash position of Berkshire Hathaway here. Okay, so let me show you something about here. Again, like people would love to scoff at how Ryan Cohen holding a huge cash position here, right? But look at Berkshire Hathaway. Does anyone, scoff at the fact that Berkshire Hathaway is holding to the tune of hundreds of billions of dollars in cash right now, right? Again, this is the end of 2023 shareholder, report over here. And what is Warren Buffett doing with that cash? And again, this is touted as something that is positive, and it is a positive thing. But when Ryan Cohen does it, it's all of the worst thing that anyone should have done with their money, right? And mind you, look, Warren Buffett is buying treasury bond with that cash. It's a smart thing to do. But yet people, again, why? Why is this a sentiment about GameStop and not the sentiment about this old man who buy treasury bond with hundreds of billions of dollars here? So I just like to address that one there. I know, I've talked about this company a lot, and I understand that people, have a sentiment the other way. But to me, those are just like, it's a trivial thing, right? It's like, again, it's a pick and choose thing. Perhaps because these people have a put position and they want their put position to print their money, and this is why they want, to give you that negative sentiment. And you could say the same thing about me, because I believe in the company for the long term, and this is why I choose to invest in the company and not buying call options, right? On the other end of it, right? And so again, just be educated, just be aware of what's going on in the market, and always be on the lookout for good companies, or find your edge somewhere in the market, so that you're not bogged down, so that you're not just listening to people telling you what to do. Oh, you should do this, or you should do that. No. Stand still. Look at what other people are doing. Come up with your own conclusion. Look into the balance sheets yourself. Don't believe in anyone telling you, oh, this price should be this should be that, right? Not even me, right? So yeah, I'll let you go there. But I'll see you when I see you. Bye.